Let's welcome in our morning guest. Shrikant Chauhan now joins us. Mayuresh Joshi, Sanjeev Basin, as well as Manas Jaiswal is with us. Mayuresh will just join us in just a bit. Good morning, gentlemen. As always, let me first start with the top picks. Shrikant, let's start with you.
Good morning, Pankaj. While looking at the overall activity of the market, which is into a specific trading range between 8750 and 8650, maybe 8600 is the next support to watch out for. But I think the way the market is like exhibiting behavior of stock-specific correction, I am of the view that India Cement is the stock to look for. Currently, the stock has spent a lot of time around 155, 156 levels. So with the same stop loss of 155 or 157, we can take long positions, because I'm of the view that it is heading for 190, 195 eventually. But at least in the near term, I'm going to say next 1 or 2 days of time, the stock may even hit the levels of 163, 165 on the higher side. The other stock which we like is Bharat Forge, and here the call is that the stock is like correcting after hitting the levels of 950, 970 on the higher side. The stock is like into gradual correction, and the way the stock has performed or exhibited that spectacular rally from the lower lows of almost 670, 700. I think 870, 865 is going to act as a very good support for it, and from here we can expect a rebound. So here also the risk reward ratio is favorable with a stop loss at 860. We can take long position in Bharat Forge at current levels.
Right. Sanjeev, you have 2 sell calls and 2 buy calls.
Yeah, good morning, Pankaj. So we have a sell on LIC Housing Finance at 600, target of 585, stop loss at 616. We have a sell on Biocon for a target of 923 and a stop loss of 963. We have a buy on Federal Bank for a target of 85 on the upside and a stop loss of 75. And we have a buy on Monte Carlo Fashion. We have been chasing this and recommending this stock all the way from 400. Yesterday it gave a very strong breakout at 480. We think you could get targets of 525 with a stop loss of 445.
Right. Mr. Jaiswal, what will be your top calls for the day?
See, I'm a little bit cautious on Nifty, so I have 1 sell call and 2 buy calls. Buy call is on Cadila Healthcare, where stock was facing a lot of resistance near to 400, but yesterday it broke that resistance. It is still making higher tops and higher bottoms on the weekly chart. And I think stock has potential to test 425 soon. So one can buy it with a stop loss of 398. Second call is a buy call on Indo Count, where stock was making lower tops and lower bottoms from the level of 1080. But now stock has made a strong base near to 700 and started making higher tops and higher bottoms. Yesterday it broke its 50-day moving average with great volumes. So I think we may see further recovery in Indo Count. It can test 860 soon. So one can buy it with a stop loss of 799, and a sell call on Adani Enterprises, where stock is making lower tops and lower bottoms. Yesterday it broke the support of 69 with higher volume. So I think this trend will continue, and we may see further downside in Adani Enterprises. It can test 64.50. So one can go short with a stop loss of 69.
Right. Mayuresh Joshi is also joining us this morning. Mayuresh, good morning. What are the calls that you have?
Morning, Pankaj. I think looking at the way the earnings season has panned out so far, my own sense is that one can actually look at cyclical counters like cement counters. Ultratech has given a good set of numbers, and the entire expectation now hinges upon how the mid-cap cement perform. Largely, I think the expectations are not great because the monsoons were much better than what really one expected, so the activity itself gets subdued. But if one goes over the next few quarters and expecting volume demand to start multiplying in terms of the GDP that we might post of around 8%, my own sense is that double-digit volume growth not ruled out, with pricing probably being disciplined at this point of time across regions. You will see those pricing patterns in terms of price stability come through. And though there might be some increase in raw materials, specifically in terms of petcoke prices moving up and expectations of freight moving up, I think the realization itself will take care, and the cost optimization that a lot of companies have embarked upon will ensure steady earnings growth going ahead. So the capex for most companies is over as an industry. Secondly, I think the consolidation is a healthy sign in terms of these parameters actually improving. And third, I think though valuations for a few companies might look expensive, as volume growth starts picking up meaningfully and the utilization levels across plants and for the sector as a whole pick up from 75-76% to around 84-85% over the next 2 to 3 years, those operating dynamics will start playing out. So my own sense is selective large cap, selective mid cap cement counters is something that can be looked at from a long term perspective.
Right. Let's look at the results as well. Result season is, of course, on full swing. And but the big company that declared numbers, of course, was Axis Bank. And it was a clear miss. So whether you look at NII, whether you look at PAT numbers, you look at the gross NPA, net NPA, slippages, commentary, on most counts, it was not looking that good. That's the net interest income, 4,500 crores, 11% growth. Profit numbers declined and declined to about 83%. Now, the key reason was, of course, very high provisioning. They had to take a write-off because of their book, and that's the reason why the numbers are looking the way they are. Let's just pull up the slippage table as well in detail, and that'll give you a sense of how bad these numbers are. So 8,800 crores, was the slippage addition. Gross NPA came in at 16,300. That's a very big number. You just look at it on a QOQ basis, it's almost doubled. Credit cost came in at 37 basis points, but that's probably because of the slippages and the gross NPA that we are seeing. You look at the total book now, almost 8.5% of their book is under stress, and that's always a big concern. Gross NPL 16,400, restructured book is now 6,700, refinanced book is about 5,100, and there is also a couple of more items which takes the total number to 30,600. In terms of the management commentary, the management had earlier said that 60% of their total book would actually slip into gross NPA or slippages for this year, which they gave at the start of this year. But now they are saying that it's no longer valid and it's likely to go up. Credit cost, of course, would also go up, and you can see the pre-open prices at the bottom of your screen. 5% decline, 30 rupees decline for Axis Bank in the pre-open session. Still 2 minutes to go, but we'll wait and watch as to how this stock pans out. Sanjeev, any view on Axis Bank? You think this is a kitchen sinking quarter and this could be a buying opportunity, or it's too early to look into this name?
Well, yes, Pankaj, you summed it up well. It's a kitchen and sink quarter. I think they've put in everything they had as skeletons, and from here we think because of the corporate side being under pressure, we think here there could only be an upgradation. We actually think that second quarter of FY17 you could actually see upgradations pick up in a big way, as we have seen in the case of ICICI Bank and a host of others on the SR Oil deal. There are a lot of corporates who are willing to get back money, and I think this should mark the bottom of the stock. So whatever the price today you get as a 4% or 3% or 5%, I would say with a 1 year perspective at 1.2 times price to book, Axis Bank would become a buy, but with a 1 year perspective.
Right, but with a 1 year perspective, and it could also correct quite meaningfully because expectations were not particularly that great, and still they were unable to meet it. So it could correct more, it could see some delivery by selling.
Pankaj, it has corrected all the way from 620 non-stop till 520. I think people in the know of the results would have already been light on this counter. I don't see further dip below 500 in a meaningful way. Like I said, 480, 490 could be numbers which may just be a one-off. This would be a very good opportunity to buy, because this has been an underperformer in the private banking space on the corporate side, and ICICI has been an outperformer. So we think that at these levels the risk reward is favorable with a 1 year perspective for at least a 25% upside in this stock.
Right. Shrikant, before we move ahead on other results, just Axis Bank, what are the levels that you would watch out for?
I think the way the stock has corrected from the highest high of 620, 625, and now it is very close to its support area, because the entire rally that we have seen. What is the support area? The support area is close to 500, 490 levels, because there the stock has spent a lot of time, and it's a support area of the retracement ratio. If we go through these long-term charts of Axis Bank, since from the lowest low of 350, 360, the stock has rallied to the levels of 625. So it's a 45% retracement area of its entire rise, which acts as a very good support for the stock. And I am of the view that after this maybe news flow, the stock is going to rebound. So whatever the lower opening is there, I think that one should utilize to buy with a medium to long term view, certainly. But for technical traders, I'm going to say for day traders or for positional traders, one should look for reversal formation on daily charts. So the reversal formation is not yet there, and I'm of the view that 490 is the level from where the stock can form some reversal formation.
Right. Bharti Airtel was, of course, also the big number. Let's just look at the numbers first. It came in post-market hours. Infratel had declared numbers on Monday post-market hours. Sales came in down at about 3.5%, 2,465, in line with what Idea did. But the profitability number was a good one. So it came in at 1,460 crores. So the sales was in line with industry estimate. But if you look at the PAT number or the EBITDA number, it was much higher, which means that they've done some cost control or they have some leg up onto their EBITDA numbers versus some of their industry peers. We're talking about Idea. Idea declared numbers where the revenues did go down, but even the profitability went down. For Bharti, it's always about both the segments. So one is India, one is Africa. India, of course, is the bigger chunk. You look at the revenues, it's looking good. The PAT is looking. However, data pricing went down by 10%. That continues to be a concern. Data average revenue per user went down 0.5%. These are all QOQ, and data revenue was up only 1.8%. Volumes went up, but again, data pricing went down, and that's why the numbers are just looking about 2% higher. You look at the Africa business, again, it looks to be decent. 5,272 crores, EBITDA at 1,212 odd crores, but it can be because of currency movement. But there was a sharp increase in the EBITDA, and that is something which probably the street may like. Bharti Airtel 1% higher in the pre-open session. We'll get in touch with the management at 2:30. They have a con call for investors. That's where you expect more details. The key thing to watch out will be that whether the geo impact has started to come in this quarter or no, or probably Q3 is where the activity has picked up, and that's why they would want to give a softer outlook. So that will be the key to watch out for. Sanjeev, again, Bharti, you have tracked this name closely for a while. Despite decent EBITDA performance, you want to look at the trajectory, whether this EBITDA is sustainable, whether they are able to sustain these EBITDA irrespective of a revenue miss?
Well, Pankaj, see, in that whole basket of stocks, this is a weak sector. And in the weak sector, I think Idea will underperform, Bharti might outperform. So 290 was a very, very strong support, which it has held for, I don't know, all the last 2 years. And so we had a buy around this 305. We think 320, 325 is something which you can get. Numbers in line or better than estimates. ARPUs are stable. We know that the problem is on the geo side, where data and voice are going to be under pressure. But we think Bharti will amble along these price levels. If you have the wherewithal to stay for say 6 to 9 months, you could at 300 get another 20% from this as the business stabilizes and we see geo, the unleashing of more things. So we think around 300 you have a fair risk reward of a 10% upside on Bharti.
Right, 10% upside. But again, correction would be a buying opportunity as the upside seems to be limited.
Like I said, if you want, you can play long on Bharti, short on Idea or a strategy like this. And if you want to be in a telecom space, there are a whole host of other stock sectors which have more visibility and where the threat of looming businesses like Jio is not there. So if you wanted to be, we are giving you the voice key on what Bharti is. At 290, 300, like I said, there is not much downside. It could be range bound, but you could get a 10% upside in the next few months.
Right. Mayuresh, what's your call on both Axis and Bharti?
No, largely I think Bharti and the telecom space will continue their underperformance. Though the India numbers were quite reasonable to say the least, my own sense is the kind of pressures that we've seen both in terms of data pricing and the ARPUs are not getting compensated adequately by the volume growth that one really expects to see. With Jio coming through in full throttle, my own sense is that competitive intensity pressures will intensify. And they've already taken huge cuts on the data pricing packs. So whether that gets compensated by volumes over the next few months and quarters is the thing to be seen. And again, the leverage on their balance sheet. So I think it is not giving comfort in terms of the debt EBITDA levels for both Bharti and Idea. So my call was that telecom as a sector will underperform. For banking generally, I think Axis Bank has front-loaded their asset quality in Q2. I think the expectation largely after the con call is that Q3, Q4 will see front-loading as well in terms of the corporate book stroke, the write-downs that they are expected to take. Having said that, I think the credit cost guidance of 150 pips that they had initiated at the beginning of the year, they might exceed that a tad bit as well. So FY 17, as I've always maintained for the corporate-facing banks, is going to be a washout year. FY 18 might turn out to be a different ball game altogether. So in terms of credit growth, in terms of credit cost moderating, the absence of interest reversals on their balance sheet, all this will point out to adequate balance sheet growth, and that will get supported by return ratios improving significantly even on a low base. So I think any decline onto these stocks in a very staggered way over the next few weeks, I think long-term investors can definitely look at it.
Right. Mayuresh, just stay on. I'll just come back to you, but the markets are just about to open. A lot of stocks to watch out for. We spoke about two names, but Asian Paints, M&M Finance, all of that would also be in focus. 34 points down for the Nifty, exactly in line with what the opening was expected, 8,653. Asian Paints is up about 2 rupees, 1,143. Infosys is down about 2 rupees. Bharti Airtel is up about 2%, 317, 318 for Bharti Airtel. Numbers were decently good. Axis Bank, right from the word, goes 6% down. 495, 496, 1.9 million shares traded. Look at the volumes, 2 million. It's not even like 10 seconds in terms of market opening. And you're seeing volumes of greater than about 2.5 odd million. So that's of course a name that one would watch out for. M&M Finance, 356 for M&M Finance, 1 rupee higher, 357, 358 now. 2.5 lakh shares traded. Adani Ports was one of the big movers yesterday, but I think that's also moving out today. IDFC Bank, 1% higher, 79. They declared their numbers yesterday post-market. We don't have exact comparables, but the numbers were looking decent. L&T Finance, 1.3, 1.4% higher, 1% higher, 103, 1% higher for L&T Finance. Let's look at Asian Paints. That's down about a rupee or so, 39,000 shares traded, 1 to 2 rupees, sort of a decline. Crompton Consumer, decent set of numbers when you compare it with Havells. So 183, 184 for Crompton, 28,000 shares traded for this name, 183, 184. PI Industries, strong set of numbers, 6% higher for that name. Let's also look at Delta Corporation. They also declared their numbers, 187, 188 for Delta Corp. So that's a company which declared its numbers. Numbers were looking in pretty good. However, the numbers have just come out this morning, so we'll try and get more details. MCX, 2% higher, 1,302 for MCX. So that's another results reaction that we are talking about. I'll just go to the mid-cap gaining list and try and find out as to what's buzzing. PI Industry, of course, is among the top gainers. That's a results impact for PI Industry, 6.5% higher. Bharti right now is gaining in very, very good volumes in terms of gainings. V-Guard, Gujarat Alkali is up 5%. Look at volumes, 1.5 lakh shares traded. So there seems to be a lot of interest over there. Bharti Airtel, 1% higher. Symphony declared numbers yesterday. I think it was up 4%. It's up another 5% today, and good volumes. When you consider Symphony, 30,000 shares in terms of volumes seem to be a pretty good one as far as volume is concerned. Tata stocks, so let's just look at them. They were all in focus yesterday. So if I look at a Tata Steel, it's almost, it's just unchanged. It's down about 1 to 2 odd rupees. No major change over there. They have been in focus, and they continue to be the case. Tatacom is down close to about 11 to 12 odd rupees. That's also a name that has done the way it is. TCS is down just 1 rupee, so it's clearly no major impact. Let's go back to our morning guest. Srikanth, we were just talking about Axis and 490. I think that's where it is. It qualifies for a buy, and if yes, then what will be the stop loss that you would look?
See, Pankaj, it is certainly it's a buy for long-term plays, because we are of the view that private banks are definitely going to do well in next 3 to 6 months of time. But for short-term traders, I'm going to say for day traders, it's a gap down opening with huge volumes. So unless and until the stock is not forming any reversal formation on daily basis, I think we should stay away. But yes, in case if during the day the stock starts sustaining above 500 mark, then certainly one can take long positions with a day's low as a stop loss.
Right. Mayuresh, M&M Finance, numbers were not that great. Outlook seems to be decent. Would you just stay on sidelines?
Right now, yes, and if you look at their pattern, I think the stock price has probably moved ahead in anticipation of numbers improving over the next few quarters. Yes, I think the dynamics have changed for the entire industry with monsoons coming through. I think the asset quality pressures, specifically on the rural side, that they face probably start tapering down. And to that extent, I think the provisioning figure also starts coming down. However, I think the provisioning norms that the company follows on a 90-day bucket, I think that will have increased provisioning going ahead as well. So to that extent, I think the provisioning figure needs to get closely monitored because of the transition shifting that they are doing. Secondly, I think Q3, Q4 onwards, I think the real shift will start happening, and I think it's that point of time when you really try to compare the kind of growth that they can probably do with rural financing, stroke asset quality pressures going down. So I think the stock has moved up in anticipation of all these things playing out. So to a large extent, I think it factors in. So yes, I think rightfully staying on the sidelines in terms of valuations as well.
Right. L&T Finance, some of the other names like Shriram, decent numbers?
Oh yes, again, I think, and it's going to be a cyclical recovery for all these players when I talk about the entire dynamics respectively. So largely, I think it hinges on two factors, as I mentioned, for M&M Financial. I think how credit growth picks up, simultaneously how they are able to optimize costs and maintain asset quality. So I think that shifting or that balancing is going to take some amount of time. And once stability starts coming through on both these factors, you'll see growth pick up meaningfully. But you need to give at least 2 quarters, and the stocks have moved up quite reasonably over the past few weeks. So again, I think one really needs to cherry pick within these sectors and be very, very stock specific at this point of time.
Right. Adani Ports, what will you do, Sanjeev? 314, 315 right now, but it was one of the big names that moved up yesterday.
Well, it's been an outperformer in the infra space, and what happened is quietly what valuation you gave SR Port on the that deal with the Rosneft, I think that added value to it. Plus there was also rumors of numbers being far ahead of estimates which played out. So I think on the we know that the Baltic Freight Index is also showing a signs of uptick globally, and Adani Port would be a key beneficiary of the GDP picking up with industrial activity also outperforming. Some of their issues with the Australian government also got handled out. So I think Adani Port is a key beneficiary of the infra space outperformance, and will, along with L&T, be a buy on any decline.
Right. Manas, what will be your view on Adani Ports after the big move yesterday?
Stock has given a clear breakout on the charts when it broke the resistance of 280 3-4 days back, and now the target comes near to 325. But I think one should not take fresh long over here. If you're long, you can hold it and keep the stop loss below 295. But I don't recommend fresh long over here in Adani Port.
Right. Shrikant, what do you do with something like a M&M Financial? What would be your view on that name?
See, Pankaj, the broader trend of M&M Financial is very strong. The way the stock has corrected from the highest high of 385, 399, and it was very close to its support area of 350, 355, where the stock has multiple support areas, and previous it was the resistance for the stock. So I'm of the view that the overall NBFC space is going to do well in next 3 to 6 months of time. Currently, whatever the sell-off is there or weakness is there on the back of any news, I think we should look for adding these stocks to our portfolio, because they are going to give us some more returns. I'm going to say some spectacular returns, even from current levels is not ruled out. The way the buying was there and the way the participation is not there. So we are specifically bullish on Bharat Financials, Shriram Transport Finance, even Mahindra & Mahindra Financials is also on our radar, and even at current levels, I think one can look for adding this stock to the portfolio with a target of 420, 430 on the higher side.
Right. How do you look at L&T Finance? It's a company which has slowly and steadily done well. Numbers came out yesterday. We will be talking to the management, but it was looking as if it's a strong set of numbers.
I think the way stock recovered from 45 to almost 100 in just a span of 1 year, and the way the volumes are there, I think it is heading for 140, 150 kind of levels. Again, here also we are bullish because it is from the NBFC spread, and the way the stock has broken its previous highest high of 2012, 2013, it is very clearly indicating us that it is into impulse trending mode. So one thing is very clear, that one can buy even at current levels, more on dips, and if there is a long-term view, then buy at current levels and sit on it tightly. 140 is the next target.
140.
140.
Right, but again, it will take some time because it's already done a big move, so it may take some time.
I think whatever is going to come in the market is going to come in next 3 to 6 months of time. So maybe it's a period of 6 months to wait for. And if we are expecting some 15-20% kind of return in next 6 months of time, I think that's more than enough.
Right. Sanjeev, how do you look at ICICI Bank now that Axis has delivered numbers after the recent run-up? Wait for the results? Because till now it was just seeing a non-stop sort of a buying.
Well, there has been massive accumulation and a re-rating of the stock, and we would say any decline closer to 270 because of this Axis numbers would be an opportunity to buy. We have a March 2017 target of 330 which may reach before time. This will be the biggest beneficiary of the corporate restructuring and the write-backs. We think the balance sheet for ICICI should do much better than on Axis. So for us, ICICI is an outperform on any decline, and Axis also should make a bottom, I think, today or tomorrow, and that would be a good opportunity to get into this stock, but with a slightly longer term outlook.
Right, but corporate banks overall continue to look very strong.
Pankaj, see, ICICI at 240 was trading at 1.2 time price to book, the cheapest it has been in a long time. And we knew what the delve of problem was. Now this being a big name, foreign investors love this stock because of the liquidity, because of easy getting in, getting out, and the ADR. And I think you've seen a spectacular move all the way from 240 to 295. I see no reason for not buying this stock on decline, because it is telling you that 2017 will actually trigger in a large part of the write-backs, both for the PSU side and on the private bank, on the corporate side. So Axis, ICICI will stand out on the private side, and SBI, Can Bank, Bank of Baroda on the PSU side. I think these stocks can outperform in 2017 on the back that government initiative, lot of reforms, and asset sell-off which is going on across the board in smaller names, with write-backs being the order of the day in 2017.
Right. Shrikant, Hero declares numbers today. What will be your view on the stock? It's done very well. I know you don't look at fundamentals, but it does act as a trigger, right?
I think the overall space two-wheeler is doing well, and they are very close to their important support levels. In fact, in last 2 months of time, we have seen correction in the market, and there is a stock-specific correction in almost all two-wheelers except TVS Motors, which is into breakout mode. But Bajaj Auto and Hero Motors are available at their decent support areas, and we are of the view that if really somebody is bullish on the market on a broader scale, then they can look for adding these stocks at current levels, at least ahead of these monthly numbers. And I think quarterly numbers doesn't matter much, because the overall trend of the stock is still intact. So buying at current levels 3400 or maybe 3420, I think it's a decent area to buy for, with a stop loss of, let's say, 3350, 3340 on the downside, and again we can expect 3550, 3600 on the high side. We are equally bullish on Bajaj Auto as well as TVS Motors. There also we have a target of close to 20-25% higher from current levels.
Close to 20-25%. Mayuresh, HUL, ITC declare numbers today. It will be interesting. Traditional FMCG names, if they can deliver on a low base, it could be quite interesting.
Yeah, but again, the expectations, Pankaj, are low-key, specifically in terms of how the realizations are going to pan out. Again, in terms of volume growth, I think expectations of 4 to 5% volume growth for HUL. I think similarly for ITC, you're probably going to see volume growth stabilizing, because there were no price hikes that were taken. But what really happens with implementation of GST, the sin tax, the rates that get decided are going to be key trends for the tobacco industry as a whole. For HUL, I think the key segments are expected to do reasonably better, but largely I think the future outlook with competition intensity pressures improving, I think is going to take a toll in terms of how the pricing moves up for key products. So largely I think expecting a reasonable set of numbers, and again valuation specifically for HUL within the entire pack is looking on the higher side. It always has, but largely I think it should deliver exceptional set of numbers, which my sense is that the numbers will be quite modest this time around.
Right. Thank you so much, gentlemen, for joining us this morning. Just before we end, Sanjeev, let's start with you. Any disclosures?
Well, as a brokerage house, we have recommendation on a lot of the stocks we have spoken. I have no personal position and I don't hold any trading positions on any of the stocks spoken.
Right. Shrikant, for you?
I do not have any position in the stocks on which we discussed today.
Right. Manas?
No personal holding in these stocks, but we have recommended these stocks to our clients.
Mayuresh, lastly for you, what are the disclosures?
Pankaj, I do not have any personal holdings in the stocks, but we may have discussed these stocks on behalf of our clients, and we may be holding these stocks on behalf of our clients.
Thank you so much, gentlemen, for taking out time for us. On that note, we're taking a break. Coming back in 2, we'll be talking to the management of L&T Finance.